So, welcome to the first proper episode of Put Your Money. We're going to be looking at B2 Gold, which has the stock BTG, and we'll primarily be leveraging a thesis written by my fellow analyst, Dmitry Lebed. There are three criteria when I look at stocks as candidates for puts. One, I want to see that the stock is relatively undervalued. Two, I want to see that they're pretty low risk. And three, I want to see that I can get a good yield based on the option premiums that are available on the market. So, one and two, we should be able to figure out by taking a look at Demetrios' thesis. So let's look here. In the bullet points, he notes that a BTG is trading around a 22% discount compared to some of its peers who operate in Mali. And it looks like there's a long term growth opportunity with the Goose project in Canada. If we go down here, for example, we see that most of their exploration budget is actually on Canada. So that suggests that there's going to be a lot more production over there, and what sounds like a less risky part of the world than some of these other areas. One thing that may have the market concerned and also explains some of its discount is the fact that its costs went up. All-in sustaining costs went from about $1,400 per ounce to 2,400 to close to 2,600 is projected for 2026. So there's definitely some margin squeeze there. If we look at a recent comparison of relative value to the peers in Mali, the multiples for BTG are quite a bit lower. These are suggestions of undervaluation in a relative sense. An important risk factor to consider is just the inherent cyclicality with gold. He notes that he's estimating a $6,000 per ounce gold price. So all-in sustaining costs aren't necessarily going to go back down to 1,400, but the price of gold can come back down. And that's the margin risk that you have with gold miners. If we look at the financial data for BTG, we do see there was pretty substantial revenue growth here. Crucially, if we look at free cash flow, we see right here that often their capex is on par with what their operating cash flows are. So eventually, they're going to need to get this under control. Otherwise, this capital spending, like what they're doing for the Goose project in Canada, might not prove to be worth it. So that's the risk that Dimitri is talking about. They're doing a lot of investment for growth. They have a higher gold price, but that is the risk. Let's take a look at option prices and my yield calculator in order to get a sense of what kind of value there is on the table if we wanted to do a put right here. I'm using the next nearest third Friday, which is May 15th. BTG is currently around $4 per share. So let's take a look at the $4 strike price. If we wanted to get an instant execution, we could sell a contract for 5 cents per share. So it's a $4 strike, 5 cents per share. One contract, you would get $5 out of $400 in capital, an initial yield of 1.25% from that $5. If we annualize it, it's a 26.84%. Let's take a look at how it changes when we alter what the strike price is, other things as well. So in this case, we're working with 450. Often the middle price in the limit orders will execute immediately. So this you'd get $30 for 450. Same expiry. So let's update that in the calculator here. So it'll go to 450, and then here we will do 30 cents per share. And you see, increases the yield quite a bit. Obviously, this is because the strike price is higher. So let's go back to the $4 price real quick. But now we're going to move it out a month, and June 18th is the third Friday of that month. For this, we can see we'd get it a bid at 15, so we could instantly execute at 15. I'm going to change this back to 4, change this to 15. Initial yield 3.75%, but we see the annualized yield is about the same because there's an extra month there. I definitely see puts that get better yields with this. So I think my final verdict is going to be this. I think there's a decent case for undervaluation on BTG. I'd say there's sort of a medium case for the risk. I wouldn't say this is low risk with it being a gold miner. As the yield itself goes, this might look good on an annualized basis. I don't think the yield that I would get for writing puts at any of the prices I saw is quite high enough. So if I were to rate BTG as a candidate for put writing right now, I'd give it a 3 out of 5. It's not something I'm dying to use as a source of income now, but I will keep my eyes peeled. It may be something I reach for later if I don't find better candidates. But a big thanks to Demetrio for writing his thesis and giving me a first good candidate to analyze. And of course, you guys could let me know if there's something you'd like me to analyze.